What's happening, everybody? It's your boy Creative. We are back at it again to create something great. We are finishing up the work we started earlier today with respect to QQQ. If you give me a moment, I'm checking my levels, making sure we are Gucci. All right, we're great. So what we're going to be doing is picking right up where we left off. If you want to go check out part one, that walks you through where we are currently. And what we're doing is we're building a breakout strategy for trading zero DTE, and those are options that are expired the same day for QQQ. And remember, QQQ is a ETF with the 100 biggest non bank companies within the US. And here is an example of their holdings, right? So we have NVIDIA, we have Apple, Microsoft, Broadcom, Amazon, Facebook, Tesla. When you see alphabet like this, one is Google, one is YouTube, right? Netflix, Palantir, Costco, AMD, or Advanced Medical Devices. So as you can see, QQQ enables us to be able to invest in this ETF while also being invested in all of these companies. Right. So the great thing about an ETF is that we don't have to buy. I get it. I get it, bro. Excuse me. The great thing about an ETF is that we don't have to buy the individual stock itself. We can just purchase the ETF, and that ETFs automatically invest us in the those particular companies. And the strategy that we're building enables us to be able to purchase same day options, right? Zero DTE, same day options. And what we're doing is buying breakouts, right? Excuse me. Yeah, can I not talk? We want to be able to find the breakout, whether it's a upward breakout or a downward breakout, right? Either if it's going through the support, remember the support is the floor, or if it's going through the resistance, right? We want to be able to find the breakout and then write it, and the maximum hold time is 15 minutes. Because we found that with zero DTE options, and these are options that expire the same day, theta is time decay, remember? And because they're five main Greeks. There's a lot more, but there are five main Greeks that we use when it comes to being able to analyze an underlying contract, right? And that's your delta. Remember, delta is going to be your relation. We have our Greeks here. So remember, delta is going to be how much the price changes when the stock price moves a dollar, right? For an example, we have a delta of 0.3. So if the stock price goes up a dollar, the delta, the option contract goes up 30. Now we know that with every one option contract, this is the example, our backtest results, and we're going to get there. Don't worry, I just want to do a quick little refresher. Then once we refresh, we're going to jump right into where we left off. So remember, option contract. For every one option contract, there's 100 shares, right? And an option contract is like a coupon that enables us to buy or sell a stock at a fixed price before a certain date. Now, that fixed price is the strike price, remember, and the certain date is our expiration date. Now, there are dailies, right? Zero DTE. There are weeklies. There are monthlies, right? There are semi-annual. There are annual, right? So you can find a range of certain dates, right? Expiration dates when it comes to an option contract. But what we're doing here is we're trading same day options, right? Because that allows us to be able to catch the explosive moves, right? That's happening intraday, meaning within that same day of QQQ. Oh, just want to let you know this is not investment advice. This is merely educational. So if you are following this, I would advise you to be able to consult your financial advisor prior to taking anything. So need that. All right, so let's continue. I'm gonna create like a little disclaimer that I can just play, be like, boot. Yeah, I'm gonna make that next, maybe later tonight. All right, let's keep going. So we have one option contract equals 100 shares. There are two main type of option contracts that we're going to be buying here, right? So we're going to be having our call option. Our call option gives us the right to buy a stock at a set price, right? That set price being the strike price. This is when we think the market might go up, right? So a call option equals bullish, right? And that's why you have your bull here. And this is when we think that the market might go up, right? when the stock price rises, you have your call options go up, right? So call option, you're bullish. Why are you bullish? Because you think the market might go up, market or price might go up, right? So when the stock price go up, usually option call prices go up, right? So then we have our put option. Our put option is the right to sell a stock at a set price. This is when you think that the market might go down, right? So you're bearish on the market, right? When you're bearish, you normally buy put options, right? Not all the case. Now there are some instances when you're bearish and you could buy credit, uh, call credit spreads, right? But we'll get there. We're not at spreads yet. We're just at regular naked options, right? So a put option, we're bearish on the market. We think that the price of the market might go down, right? Normally, when stock prices go down, put options go up, right? And now we have our volatility. Now, volatility is letting us know what is going on right now, real time, not in the future, like right now in the market. And what we're using as our volatility index, right, is VXN. The reason we're using VXN is because we're trading QQQ. Now remember, QQQ, the top 100 non-bank companies within the UX. What VXN does, it gauges the volatility of said QQQ, right? And the underlying market. So what we can do is we can use VXN as our volatility gauge, right? So real time, we can say, okay, you know what, how volatile is the market right now? And QQQ and VXN are both on the NASDAQ. Now, the difference between the NASDAQ and the New York Stock Exchange, remember, we talked about this before, but this is our little office hours before we get to, bruh, I get it. You don't gotta keep saying it, bruh. I get it, bruh. Okay, here we go. Here we go. And the difference between the NASDAQ, remember the National Association of Security Dealers Automated Quotations, right? Or NASDAQ. NASDAQ is the techie modern cousin of the New York Stock Exchange, or NYSE, right? It started out completely electronic, no shouting on the floor, just computers and networks, right? So there's no physical trading floor. It's all online for the NASDAQ, right? Lots of technology companies. So that makes sense why QQQ will be there. But NASDAQ, a lot of companies, a lot of different ETFs, a lot of different indexes, right? Funds that are within the next, that a lot of different, right? We just like QQQ because of its liquidity. And what liquidity means is that when we buy, we don't have to worry about somebody not, excuse me, when we buy, we don't have to worry about when we're selling it, somebody not wanting to buy it from us. And the inverse, when we want to sell, right, we don't have to worry because there's somebody always willing to buy that from us, right? So there's always somebody in the market willing to buy QQQ options, and that's liquidity, right? So we want to make sure that we have high liquidity because the way we're trading our option contract, our option strategy here is that I want to be able to dispel the notion that you need hundreds of dollars to be able to trade options, right? What we're doing is we're starting with $100, right? We're not, so this is a very limited in scope, meaning that it's not across all assets, right? We're working with one particular, but I mean, if you think about it, it kind of is across multiple different assets because it is an ETF, and that ETF represents multiple different companies, right? And we showed you QQQ's holdings as the top 100 companies. So if you think about it, we are diversified across multiple different tech companies. We are overly indexed on tech, right? But what does it give us? Liquidity, right? What does it give us? Diversity, right? What does it give us? The opportunity to be able to trade options, right? Starting with $100. So what we're doing is we're dispelling the notion that you need thousands of dollars to be able to trade options. No, you can start with $100, especially when it comes to algo trading. Start with $100, be able to have your strategy, backtest your strategy, paper test your strategy, then deploy. So we have a couple other strategies that we've done, mainly on SPY, because I know SPY very well, and now we're working on QQQ. So this is the next index that we're trying on NASDAQ to be able to see how well is this challenge going, right? Of us being able to start at $100 and see where we can take the strategy, right? So again, the NASDAQ, again, is just a little bit a modern techie cousin of the New York Stock Exchange, right? So what we're doing is, so I talked about volatility. Remember, volatility is right now. So if we look at our VXN, right, and again, it's after hours. So we're not seeing, we're seeing quote unquote a live picture, but it's live end of day, EOD picture, right? So with being able to look at VXN, we're seeing that it's elevated. So let me tell you, for me in my house, right? My ranges, right? Everybody has a different philosophy, right? When it comes to being able to say, okay, this is what I think. Excuse me, let me check my levels, just making sure. I know I keep doing this, but until I'm sure, okay, we're good. So what I'm doing, excuse me, everybody has a different philosophy when it comes to being able to say, okay, you know what, these are my levels to understand volatility and things of that sort. So for me in my house, right, anything between 10 and 15, we're looking at calm, right? We're looking at the market is not expecting that much to happen. We're looking at is business as usual, right? In between 10 and 15, right? Anything between 15 and about 20, right? Really 15 to about 23, 24, right? I'm going to call that elevated, right? Or starting to be, or low elevation, elevated. Just call it elevated, right? Reason being so is because we're not calm anymore, because calm is that 15 range, right? So we're a little bit elevated. So the market is expecting something big to happen, right? Whether it's going to be a bullish environment or it's going to be a bearish environment. And remember, bullish and bearish, all that's telling us is bullish, I think we're going up, bearish, I think we're going down, right? So us being in 20 right now, we're a bit elevated because the market is expecting something to happen. Now, we don't know if that's going to be a positive thing, we don't know if that's going to be a negative thing, but we're expecting something to happen. Now, normally when it comes to VXN, and this is a volatility index that is on the NASDAQ, and again, what VXN does, it follows the volatility of QQQ, right? So VXN normally has an inverse relationship with QQQ, right? Meaning when VXN is up, QQQ is down, and when QQQ is up, VXN is down. There are times, right, when VXN helps QQQ, right? Because remember, we said the market is expecting something. It's not always a bad thing, right? It's not always a good thing, right? But the market is expecting a big swing. So when the market is expecting that big swing, QQQ just allows us to gauge, all right, what's the volatility? What's going on right now, right? So implied volatility has to do with the underlying option contracts themselves. So when you look at an option contract, you're going to see IV, then you're going to see a percentage, right? So anything above 50, 60, right? Let's just say 50 is high IV, right? And the implied volatility, what's that telling us is that the market, what the market is expects in the future, right? Usually within the next 30 days, right? So high IV is going to equal expensive option contracts. Now, if you're selling options, right, you're printing money, right? So you want high IV, right? Because you're selling and people are expecting a big move, so you're going to be collecting big premium, right? So when you're selling high IV, or AKA theta, that works for you, right? So, but low IV, right? Affordable prices. Like, this is what we want. We want low to mid IV, right? Because what we want is that, okay, we don't want our option price, our option contract to be extraordinarily too big. Like, I'm not going over $44, right? Because that doesn't make sense. Because what we're doing here is we're compounding contracts, meaning that we're using and looking at our strategy here. And I believe, okay, hold on. No, it's not. And those are the parameters, but let me show you what we're doing with our position. Hold on. All right, here you go. Here you go. So when the account is less than $50, $500, $50, that's crazy. When the account is less than $500, right, we're in growth mode. So what does that mean? We can use up to 80% of the account balance, right? So if it's at $100, you can use $80, right? So when the account is in momentum mode, anywhere between 500 and 1,000, right, you can use 50%. And preservation mode is 30%, right? Anything greater than 1,000, right? So what this enables us to do, our risk management, number one, because we're compounding contracts. So with $80, right, we can buy maybe one or two contracts, right? But we have proper risk management. What do I mean? Is that we have our take profit levels, meaning that we're not holding this contract for more, excuse me. Let's talk about risk management, then I'm going to talk about the take profit. So the risk management is telling us that, okay, we're not holding this contract more than 15 minutes, right? After 15 minutes, I'm out, right? Also, within the first 8 minutes, if I hit the take profit 2 level, meaning that if we make 100, and I know that sounds ridiculous, but you'll see in the back test, right? If we hit 140%, right, within the first 8 minutes, then take me out, right? If we hit after the first 8 minutes, between 8 and 12 minutes, if we hit 70%, take me out, right? Sell. Or within the 12 and 15 minutes, right? That last little stretch, right? If it's 35% or better, take me out, right? Then after 15 minutes, you're taking me out regardless. And at any point in time, if the option contract is down 35%, and I'm probably going to drop this down to 20 because 35% is stupid big. So I'm probably going to drop this down to 20, right? So we're going to see here. The reason we have 35% because it's very particular. We have a 1 to 2 risk reward ratio. What does that mean, right? It means for every $1 we're risking, I want us to make $2, right? Excuse me, I'm not trying to cough in your ear. So what does that mean, right? For every $1, I want us to make $2. So we're risking the $1. So if I'm risking the $1, if I get down to what is that, 65 cents, right? For that $1, take me out, right? But if we're up $1.70, take me out, right? Or if I'm up 240, right? Go ahead and take me out, right? So as you can see here, we have room to allow the explosive moves to happen, which can happen in option contracts, especially the way we're doing it here, is we're buying super out of the money contracts, right? So what does it mean? OTM, out of the money, right? So we're buying option contracts that, let's say if our current price is SPY, and I know we're talking about QQQ, but just follow me, right? Don't follow me, but follow me. Let's say if our current price of SPY is 498, right? And excuse me, and we just bought an option contract, right? With a strike price. Remember, this is the price we think that SPY is going to go to before the end of the day, 501, right? So we just bought an out of the money contract. Why? Because that's 2 or more levels up for calls. Now, for me in my house, I believe in 2 or more levels, then you're out of the money, right? I've heard some school of thought where there's 5. The craziest I've heard is like 10. I think that's wild, but hey, everybody has their own school of thought when it comes to in the money, out of the money, right? But for me, I'm going to consider 2 or more levels. So anything 2 or more levels up is going to consider out of the money, right? So 499, we're super close to our current price, so I'm still in the money. 500, still super close to our current price, so I'm still in the money. So anything greater than or equal to that 501, that's going to be considered out of the money, right? And puts work the same way. Anything less than that 495 is considered out of the money because the current price is at 498, right? So we talked about our risk management. We talked about the capital and the position size, and these are our parameters, meaning that, all right, I'm looking for this is our momentum breakout strategy, right? So what does a breakout mean? We talked about that a little bit, right, in the beginning. So a breakout is meaning that, okay, it's pushing towards the resistance, trying to make a new high. So what we're doing is we're looking at QQQ, right? First, what we're looking at is VXN, right? Before we even get into any trade, we're looking at VXN, right? And we're looking at VXN 1 minute, and we're training our strategy to be able to do the same thing. So it's looking at VXN and the 1 minute bars, right? Each one of these bars, even though it looks sparse right now, but trust me, it's a bar. Each one of these candles represents 1 minute, right? So we're training our strategy to be able to look at VXN. What level is VXN right now? Remember I told you 10 to 5, 10 to 15, 15 to 23, 25 and up, right? So our strategy only works between 5 and 33. All right. 5 is not too calm. 33 is not too crazy, right? We want to be able to catch some of that high volatility, right? We want to be able to catch some of that chaos, but not too much, right? I may go high as 35 to be able to see how those levels are. But right now we're finding a lot of great success at 33. So that's why we're benchmarking it at 5 to 33. Right. So the first thing the strategy is going to do is look at VXN. If VXN is high, mid, low, right, then it's going to say, okay, bet. I know what I'm doing. Then next thing it's going to do is look at QQQ. Then it's going to look at the past 5 candles. So 1, 2, 3, 4, 5. Then it's going to say, okay, in what direction is QQQ going, right? If there's a breakout, whether it's a breakout or breakdown, right, I think there's going to be a breakdown, right? In one episode, we're going to be doing candle reviews where we break down the candles and how to be able to trade just looking at candles. But for right now, we're doing algorithmically, right? So we're having a robot, right? We're having a code, for lack of a better word, and I'm using Python. Oh, I should have said that before. So I'm using Claude Code, and within Claude Code, I'm using that within Cursor, and I use ChatGPT to be able to flush a couple of things, ideas out. But nonetheless, let's keep going. So what our strategy is doing is looking at the past 5 candles. So 1, 2, 3, 4, 5, right? And each candle represents 1 minute, right? And it's saying it's trying to determine, okay, is the price trending upwards, right? Is it heading towards resistance, or is it crashing to support? Remember, resistance is our ceiling, support is our floor, right? So if it's heading towards resistance, that means there's a breakout coming. But in order for it to confirm that there's a breakout coming, we have to make sure that there's volume, meaning that I just don't want to see price movement. I want to make sure that there's people buying, people selling, right? I want to make sure that there's people in the room, right? And our price breakout movement is slight. It's kind of loose right now, right? It could be a lot tighter, right? So this is only saying, hey, I need to only see like a 2% jump between the last 3 bars, right? Between the last 3 candles. That is super, super loose, super, super liberal, right? Because right now we want to be able to test to see, okay, how well this strategy does. So we can be able, this is one of the parameters that we can tighten up, right? This one right here is kind of almost set in stone when it comes to the VIX filter. We can maybe go up a point or two, but not that much, right? Our delta, remember our delta is our probability. I know I'm going back and forth, but y'all just follow me. Don't follow me. Our delta is the probability of profit. What our delta is telling us is that, okay, our option, we're buying options that have a 5% or 44% chance of being able to expire in the money, right? Remember, in the money is when we start making money. So if it's a call, we're bringing that 501, the price is 499. We're betting that before the 15 minutes are up, right, that this price is going to go from 498, excuse me, to 501 in that 15 minutes, right? And if we're not right, we're going to catch whatever momentum shoots up that way, right? Sometimes with these option contracts, right, you just need to catch delta. Remember, probability of profit, that tells us how much the option contract is going to move in relation to the stock price, right? So if we are able to, okay, this is, where I got it. Remember, if we are able to catch our delta going up, right? Because we caught delta, let's say at 10, right? Point 10, right? But if we are able to catch our delta going from point 10 to point 15 to point 20, all that increase is money, right? So being able to buy an option contract at point 10, don't let that scare you, right? And being able to bet that, hey, it can go from 499, 498 to 501 in that 15 minutes. But if it doesn't, but we still have movement in the direction that we bet, meaning if we bought a call and there's still upward movement towards that support, right? There's still that upward movement. So let's say we bought that 499 and it's right here, but there's still that upward movement that can go up, and after the 15 minutes we're here, right? Just because we didn't catch to the 501, that's at the peak of this chart here, right? Doesn't mean we don't make money. It just means that we didn't max out at the full 70%. Maybe we got 60%. Maybe we got 40%. Maybe we got 20%, right? But you don't go broke taking a profit. That's what I heard. So that's why, like, this really is a way for us to be able to make sure that the strategy is, or excuse me, when the bot is out there working, like, it's not doing its own thing, right? We're giving it rules, we're giving it parameters, we're giving it configurations. This is what you do, this is how you do it, this is how you make money, this is how you protect the money, right? So I think I talked about, so we only trade in the morning from 9:40 to 11:30. Anything after that, you are just chancing it. Again, why? This is options that expire the same day. So if you didn't make your money before 12 o'clock, just forget about it. I mean, yeah, you could take your chance after 12 for same day options. You better know what the hell you're doing. So that's why we only do it in the morning, right? From 9:40. I haven't tried 9:35 yet. Reason I'm doing 9:40 is because I want to miss that morning chaos. That first 10 minutes, like, you can miss me with it, and we all know that the market is open between 9:30 a.m. and 4 p.m. Eastern Standard Time. So what we're doing is catching the first, what is that, 2 hours and just under 2 hours, like 180 maybe. That's 2 hours. That's over 2 hours. Just a little under 2 hours, right? Of market time. So we have 2 hours to be able to say, okay, I'm going to bet 80, and my chance, if I can maybe to get this 80 to 85, 90, 100, bet, run it, right? And these results are shocking, are shocking. But again, we're going to get there. So we did run our first back test, and that back test it did go well, right? And I know you're going to say, no, it can be. Go check out the other video, right? Go check out that video, and you'll see how we started the strategy, how we came up with the idea, how we came up with the parameters, right? And how we, using one AI, going to the other AI to be able to get this up, right? So we started at $100 and we ended at 149,000. It's crazy. And I ran it on 2024 data. Remember, back testing is taking your strategy, throwing it in a time machine, and seeing how well it performs on 2024. It kind of did okay. I think so, right? Then we're going to put it back in the time machine and throw it in 2023, and that's what we're doing right now, right? So this is 2023. So with 2023, we noticed a few things, right? There's a couple of things that we need to address in 2023 because it didn't have the greatest performance, but I think it's due to the configurations or the way that data is being spliced. I don't know. It was trying to explain it to us before I went off, but I just couldn't make sense of it. So as you can see, 2024, phenomenal stuff. We had 238 trades. We made 113,000. This is version 1. Version 2, I didn't write it down, but that's fine. We have it here. Version 2, right, is 238 trades, and we still crossed a little 100 over 100K, right, for 2024. Now, 2023 had a bit different results, right? 14 trades, $39, 60% return, right? Account blew up. Now, I'm trying to figure out, okay, what happened, right? Now, the root cause is a few hypotheses, right, that Claude has. And again, I'm using Claude code with inside cursor. These hypotheses, okay, 8 trades, there were no trades. The 4-month gap, no trades. And 1.5-month gap, no trades. 5-month gap, no trades. No trades in the end of the year, right? And these were due to a couple of things. The biggest thing is the option available at the exact timestamp of the breakout plus the matching strike distance. So this is code for saying that, yo, there's some shit that's mismatching, and because it's mismatching, I can't execute the trade. But it doesn't make sense because we just ran this on 2024, and it's telling me that there's an issue here, right? So the recommendation is, instead of the exact timestamp matching, use the nearest available timestamp within a tolerance, right? The current is static. A proposed is a 1.5 minute tolerance for the option quotes. So my question would be, what is the impact of doing this how you proposed it? And are you certain this is a issue? So I'm waiting to see how that's going to work out. As soon as we see how that works out, then I'm going to be able to just continue the work. All right, waiting for the output. And hopefully we can get this done and back tested. Then once it's back tested, create our bot and then get it ready for paper trading tomorrow. Now, normally I stream on Twitch. My first couple of days being able to be here on YouTube. So I appreciate you all for the support, right? Of being able to follow. If you do have questions, please let me know. I'm here to help out as best I can, right? But I appreciate this on YouTube because it's a little bit more smooth, right? It's just, all right, Streamlabs, hello, go. Now I feel like on Twitch, I'm fighting it every single time. Now there's a little bit more strict so in our example, right? Twitch is Nasdaq, YouTube is New York Stock Exchange. There's a little bit more rules you got to follow here, and I appreciate that. There ain't no problem with that, right? But I just wish that Nasdaq will get its shit together, just to be able to drive that point home. All right. My only issue here is you see this context until auto compact. Now you probably have like 100. You have 100% of context, right? Per session when you use Claude Code, and when it gets down to 0%, what it's going to do is auto compact, meaning that it's going to take all this information. Let me dig into why February 1st had a signal, but no trades were executed. So what it's going to do is take all of the files, everything that we talked about, and condense it into memory, feed it to Claude Code, and then restart the session with context of what we just did. Now, I don't like doing that most of the time, right? I like to be able to give it our own memory files, because sometimes it can just miss a few things or it overgeneralizes the memory, right? But for what we're doing, because it's not super complex, and it's back testing, for God's sake, it isn't like that much that we need to do. So for the auto compact, and I'm okay with having it auto compact, and then we're just going to catch it on the back end fam. So I'm just waiting for the output, waiting for it to be able to tell us, all right, what happened, why did it happen, what did you see, how did you see it. Deep dive, why did February 1st, 2023 have no trades? Let's look. That's the 3rd, that's the 4th, that's the 6th, that's the 9th, that's the 10th, 11th, 13th, 13th. Oh, I don't understand. We didn't have any money. The account was blown, my guy. I think they're looking too much into it. The account was blown, meaning that like there wasn't any more money in the account. So that's why there wasn't any trades. What I think is the 1 day rule working correctly. It is. I think okay. I think the AI is looking way too deep into it. And I think that what happened is the account was blown. It ran out of money. That's what I mean. The issue is found is not a timestamp matching issue. This means that there is a bug in the backlog. Wait. The issue is not a timestamp matching. On February 1st, the breakout signal was at 10:44 a.m. The VXN range was 2601, well within. 8 valid options matching all criteria. This means that there is a bug in the backtest loop preventing the trades from taking even when all conditions are met. Let me check the account balance logic. Maybe the account was too small to trade. That was the case. It's not rocket science. It ain't rocket science, homie. Clearly that was the case. Clearly. Again, you want to make a mountain out of a molehill. I get it. Maybe I don't. Maybe I don't. All right. The balance was sufficient. Now let me check. Maybe there's an actual premium was too expensive for the account. Maybe. The real issue is now let me check. Okay, wait, what? The real issue is that the contract integer, the risk amount divided by the cost per contract, that's okay. But in the code, the contract equals max 1 integer contract float should give 1. Wait, let me check the exact. Bro, you making a mountain out of a molehill. Wait, found it. The risk amount was 43.97. The minimum balance. Oh yeah, there is something wrong with the balance. It's hot code. So maybe you are right. Remember, there was that hot code streak. The minimum required was 44. true skip trade. The problem is that when the risk amount is slightly less than the minimum required, the trade is skipped, even though that, bruh, we can't afford it. It's too, yes, skip it. The current behavior, it rejects if the risk amount is less than the entry price times 100. This is too strict, missed a valid contract. How? Am I tripping? Risk amount, minimum amount required to trade. So we had, okay, hold on. Maybe I'm tripping. In 2023, the account shrinks to $55. Mini trade option costs $40 to $50. The risk amount is was $44. The option needed $44 rejected, but you still could buy one contract. What happened in 2024? The account grows quickly. Larger balances equals more buffer. Rarely hits this edge case. This is not a timestamp issue. The fix is simple. Before, if the risk amount is less than the minimum required balance, then continue. After, allow trade if we can afford at least one contract. If risk amount is less than the minimum required times 0.99, the tolerance of 1%, continue. Or better, calculate the contract first. Check if is greater than 1. Contract affordable. Should I implement this? All right. Wait. Maybe. Does this I don't want to say that. Does this supersede what we have done regarding the position sizing or other risk management criteria that we have done previously? Cite your sources and response. Because I just want to make sure that with this, damn, when we're getting down to 4%, and I got all these follow up questions. See, I didn't even, but now that I remember, there was a few issues with regards to position sizing that I wanted to bring up, but it just brought it up a lot quicker than I initially acknowledged, fam. But that's Gucci. There ain't nothing wrong with that. There ain't nothing wrong with that. Okay. Conflict found. Intent. Don't trade if you can't afford it. The option is too strict. Reject all valid contracts. Always buy at least one contract. Never reach if this line 531 blocks it first. Does this contradict your original risk rules? No. Your original logic was, I understand that. What it doesn't say, you must have 100% of the option cost in the risk budget. Skip trade if risk is less than 1 penny short. Risk up to X amount per trade. What it should be is risk up to X amount per trade. If 80% and the option contract is 44, still okay to buy one contract. You're risking 44 from the $55 balance. The fix, option A, conservative, check contracts, right? With option B, slightly loose, allow 95% match with, okay. My recommendation is option A, its logic is cleaner, no match. The logic is cleaner and matches the position size logic exactly, and respect your risk management rules. Fixes the 2023 backtest and allow the one valid contract with no change to 2024. This does not change your risk rules. It is fixing the bug where the pre-check is stricter than the position sizing allows. All right. Yeah, I got it. All right. We got you. Let's proceed to update, fam. So just as a heads up, so you know, I'm probably going to be on for 90 minutes. I'm going to see maybe 2 hours, closer to 90 minutes though. So we're going to try to get as much as possible done within this 90 minutes. If we can get code, the bot done too, we rocking. Right, so we're going to be working. Boom, boom. Check the math. I can see the issue now. Fixed. Wait, blocked. Wait, this still blocks it. Let me check the math. Okay, check and make sure before we run it. All right, remember we got to get it organized. Shit is about the compact anyway. Here is 2023 V1. Oh, V4. V3. I'm tripping. V3. Um, let's move. And guess what it did? Compact. Didn't I tell you? So what we're going to do is run our back test. Because I know it's fixed. It's just one of those things I just have it do just for the sake of it. So it's going to load the back test. I'm going to go grab some water while it's loading. So just give me a moment. It's loading. It's going to take like another 2 minutes or so to load it. Our back test is running. It's in May, or what I'm saying, February. We lost. That doesn't make. That must have been 10 per contract. Let's do math. What is 54.96? 54, 54.96 times 0.8. $43. It's still tripping. There is still a bug in the code. Review and let's find it. When we had 54.96 in the account, 43.96. 80% equal 43.96, but 16 available. What is the issue? And let's fix this. Don't make sense, fam. I see the issue when the account reached 496. The risk should have been 43.97 to risk. But the code is rejecting the option costing 24 to 43, even though they should be affordable. The bug is that the 95% threshold is too strict. Let me trace it. Should pass, but wait, I see the issue now. Wait, let me. Okay, I thought I was going code. I see the issue now. The issue is that we're checking each option individually by the risk. Or excuse me. I see the issue now. The issue is that we're checking each option individually, but the risk amount is 43.97. It's being compared to each option cost separately. Looking at the output, the insufficient funds, we need $33 for one option contract, but we have 21.72. Wait, the risk amount shows 21.72, not 43.97. Let me calculate the dynamic risk function. Aha, I found it. Line 66 through 75 shows the dynamic risk scaling logic. After four, okay, the code hot, the risk it cuts in half. This is why it shows the 2172. Output is slightly different due to the updated balance. Okay, recent performance, the cold streak, hot streak. I told you. So the dynamic risk scaling is working as intended. It's protecting the account during a losing streak by reducing the position sizing. However, this is causing the account to get stuck because loses some trades, risk drop to 40%. 40% of 55 is 22. Can't afford most options, 25 to $50. Can only trade very cheap options, high chance of loss. Continue losing, stuck at the 40% risk. The real issue is the dynamic risk reduction is too aggressive for small accounts. When you're at $55 and you get dropped to a 40% risk, you only have $22 worth to work with, which eliminates most valuable contracts. The solution is to disable the dynamic risk scaling entirely for the accounts less than 500. Let it run at the 80% consistently. Make it less reductive, aggressive, 0.75 instead of 0.5, or only apply when it's 200. Which one do you prefer? So here's the thing. I kind of want the cold streak, hot streak to stay. Review and advise how the cold streak and hot streak works in plain English so we can get it before we adjust it. Or are you just looking at a screen? Let me, okay, I want to keep it here. Looking at the dynamic risk scaling logic, here's how the cold streak hot streak system works in plain English. When does it activate? Only kicks in after you completed 5 or more trades. Always looks at your last 5 trades only. What happens during your hot streak? If you win 4 out of 5 trades, the 80 to 100% win streak, the risk stays at normal levels, 80% of the account. One example, 4 out of 5, where it stays at 80%. What happens during a cold streak? If you lose 0 or 1 trades out of the 5, a 20% win rate, it gets cut in half, right? If you 1 out of 5, it gets cut from 80 to 40%. What about the neutral performers? If you win 2 or 3 or even 3 out of the last 5, 40 to 60% win rate, risk stays at normal. Example, your problem is that in the back test, the trades 1 through 9 mix results. Some win, some lose. The balance drops from 100 to 54.96 after 9 trades. The last 5 trades had 1 win and 4 losers, a 20% win rate. The cold streak triggered. The risk dropped from 80% to 40%. Once stuck at 40%, it basically becomes untradeable. So that's what that is saying. questions. Do you want to disable the code streak, right? Um, without overfitting or introducing bias, why did the four trades lose? Doo-dum. So we're just gonna look at what happened with those four trades before I maybe soften the penalty. That 0 out of 5 is crazy. And 1 out of 5 I think makes sense. Let me just drop it to like 65, 70. Let's do 65. Looking at trades 1, 3, 4, 6, 7, and 8. The losing trades were the first 8. That's crazy. A call 272, bought at 35. What happened? It climbed to 41 by 944, then crashed to 17 by 946. Stop loss at 17 after 6 minutes. Price reversed violently after initial move. Peak at 3 minutes, then drop to 58% in 2 minutes. Time stop. We bought it at 50 and then climbed to 69 by 947, then slowly decayed to 43. Time stop at 15. Peaked at 38 at 7 minutes, but TP1 requires 70%. Couldn't hold momentum, exited to 14%. The put, we bought it at 54. What happened? It peaked and then it crashed to 32. Yep. Very shallow initial move, then reverse hard, never close to the TP levels. Then the put 268, right? 460. I want one that is, so I want a TP that is more adaptive to the underlying option itself, right? So if it peaks at, for example, if it peaks at 38, right? Then I want to catch it. If it peaks at 11, then I want to catch it, right? If it peaks at 40, I want to catch it. All right. So I have a question. So question, would it be possible to create a TP system that is more adaptive to the underlying option contract, right? Right. Meaning, if it peaks at different levels, we are able to catch it, and then exit before reversal. Is that possible? Cite your sources in response and how we would do it. So right now, our biggest thing is a risk management, bro. Like, it's not even the logic. Like the strategy itself is freaking phenomenal. It slides. It's just the logic within itself. If we can catch these peaks, and again, doing this without overfitting, like it's peaking at 11, it's peaking at 40, right? It's peaking at 5, right? If we can just catch these peaks, my little small wins, 17, like they add up. So I want us to be able to figure out a system where we can have our TP, our take profit, to be a bit more adaptive rather than like don't I ain't gonna hold you, like what we have right now I thought was adaptive within itself. Um Yes, that's absolutely possible and commonly used in professional option trading. This is called a trailing stop or peak exit, right? Evidence from professional trading literature, managing wins, when to take profit. Study shows that taking profit at 50% max gains improve win rate by 88 to 12% compared to holding to target. Tasty trades, okay. Alpha. Kirk Duplessis documented that trailing stops based on profit, reduced drawdown to 15 to 20%, and zero DTE strategies, right? CBOE volatility benchmark. Professional market makers use high watermark exit. If an option drops X from its peak, exit immediately. I like that. Um, I'm just going to keep you right here so I can germinate on that later. How to implement the adaptive peak based exit. Instead of waiting for a fixed TP level 70-40%, you track the peak price during trade. Already doing this. Set a trailing stop. Example, if the price drops 15 to 25% from the peak exit, then exit when reverse detected before it becomes a full stop. Example, your current system 47 66, 40 in 1 minute, TP1 70%, 80%, 80 never reached. Until stop 0.25, we lost 47%, resulting in losing $22. The adaptive peak system, okay, 40% in 1 minute. Lock this as the high watermark. Oh, that's what you mean by the high watermark. Trailing stop loss, 20% below peak. Exit triggered at 53. Result exit around 50 to the 8 to 13 in profit. The tiered base, tighten at 15%, once up 30%, once up 15%, and loose if still building. Okay, I like this. A hybrid, the most sophisticated, combine the time-based target with peak protection. Time hold equals the minute since entry, the normal peak target for the first 8 minutes. Hold time, 8 minutes. The current peak price is 240, right? After 5 minutes, if peak but reversing, exit with profit. Best of both worlds catches explosive moves and protects the reversals most complex. Start with 2 because addresses the real problem. 4 out of 6 losers peaked. Then reverse. Keep the winnings. Won't exit early on strong movers. Okay. So what do you all think? The 2, this gives us that high watermark, right? That we were talking about before. And I think 3, this is a waste of time. It still doesn't address what I'm talking about before. So if we were to do, all right. So if we were to implement option 2, what does that do to the current system? What needs to be updated? Dum, 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 dum. Boom, 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 boom. I'm just waiting on the output. As soon as we get the output, we'll review, have it update the code. And then once it's updated, we'll be, bro, you are doing way too much. I should limit you next time. You don't need 1,000 tokens to tell me what's really good. Perfect. I can see the exact, I can see exactly what needs to change. Let me break this down for option 2. The current system, what's missing is no protection from peak, but now reversing scenarios. Option 2, new exit, add before time-based exit. Current order is stop loss, time-based, time stop. Then new would be stop loss check. I still think I want to tighten that. Tiered trailing stop loss. At this time base. So we're changing, and then we're entering new code for the trailing stop. Okay. All right. So quickly, with only using 128 total tokens for output response, is this overfitting or introducing bias? I better still use like 300. Did I tell you? No, why not overfitting? We're not turning specific trades or dates, using universal patterns, protect gains when reversing from peak, apply same logic to all trades across all years, professional standards. You can take that where you want it. Why not introducing bias, reacts to price reacts to the price action, not the prediction. No look ahead bias, only using the current price versus the observed peak. Threshold 25, 40, 15, 20 are standard in industry. Prevent real problem, holding winners that reverse into losers. What it is risk management improvement, protecting unrealized gains, and standardized practice in option trading. All right, let's proceed, homie. Let's get it in. I don't need that. So let's go ahead and have it update the code. Then once it updated, I'm going to have it double check. And then once we have it double checked, wait, no, double check your work to make sure there is no issues or errors with what you've just done. Boom, come here. We're going to clear, get that ready. I'm pretty sure you're Gucci. But just in case you're not, I really want to tell you, but I'm really not pot. All right, so let's go ahead and run our back test. Again, this is on 2023. Same parameters. The only thing that we've added is this time. Wait, where is it? Nope. So it's not even in here now. We added the new trailing stop loss, right, to be able to protect from, to be able to protect us from reversals. So let's look at the performance. Again, there's a couple of things that I still want to be able to tweak, but I wanted it to run 2 full years, and after running 2 full years, then I'll make the adjustments before we run it on 2022, right? So we're training on 24, 23, and then we're going to validate on 22. Now, 22 may be a bitch of a year. I ain't gonna hold you. That's super, super bare year, so I don't expect it to do good, but I expect it to still perform. So let's see. So that's when, and this is, again, this is our breakout strategy. I still want to create a mean reversal strategy for QQQ so we can trade both days, right? When we are in bear market or when we are in a bull market. So right now we're doing our bull market specialist, and then we'll create our bear market specialist. And it's kind of bull market with a little bit of high volatility, right? Normally, when you want bull market, you want low volatility, right? But we're doing bull market with a little bit of high volatility. Well, look at that. Maybe what you did, oh, look at that. It kind of maybe worked. We're surviving 23 now at 500. I ain't see that before. That's crazy. One little modification. One little modification to check what we doing. I'm not gonna hold you. There's still a couple of adjustments that we need to make, but we're seeing a great performance, right, with adding the trailing stop, the stop loss. But I think it could be a bit tighter. And there's a couple of things that I'm seeing. We just crossed $1,000, and if I could tell you the month, I would. We're in March. We're in March. We're at 1,800, 1,700 right now, 1,900, and we're in March. We just crossed 2,000. Just crossed 2,900. And whenever I see the best trade so far, I'll pull it and we'll go dissect it, just like we did for 24. That's crazy, right? But y'all seeing the sauce, y'all seeing how we're able just to tweak one little thing at one little thing, and look what happens to performance. There's still a couple of things that I want to adjust, right? Just based off what I'm seeing here. I still think the trailing stop loss, or excuse me, the stop loss could be a bit tighter. Instead of that 35%, I'm thinking let's maybe get down to 20, right? I want us to get down to $65 and panic. I want it rather from 100. If we could get down to like 80, oh, yo, we're panicking. We're at 3,400 right now. And look at that. I didn't even have to touch the cold streak, hot streak, right? We didn't have to touch the cold streak, hot streak. Cold streak, hot streak wasn't touched. That's still implemented. Still proper risk management. That's still saying, hey, if you lose 0 out of 1 trades out of 5, like, yo, I'm going to need that. So that's still implemented, right? So the strategy is still running as we can, but I still think it could be tweaked a little bit. We just crossed 4,000. So right now it's oscillating back and forth between like 3,700 and like 41, 4,200. I mean, the highest trade I've seen right now is 657. Next time I see a $600 trade, I'm gonna take it. Oh, we're seeing 800. All right, let me take that. Let's take that. Okay, I found a trade. Let's take this trade and let's break it down. All right, here we go. And I'm still keep an eye out. We just crossed. We're at 8,000 right now. That's crazy. All right, so we're gonna let that go. This is 2023 backtest V4 trailing stop loss added best trade. All right, let's go over it. Oh crap, I'm folded. Okay, hold on. And here we go. So the account balance, we just made $4,000 in one trade. I'm taking this one too. I want to break this one down. This one was crazy. We're at 24,000. I blink. You literally blink, flam. 39. So you see, bruh, like how adjusting one little thing, and look what your strategy does. It goes to the moon. All right. So the account balance at the time was 3,900. We're in preservation mode, so that means we're risking 30%. So our risk amount was 1,194. We're at 50,000. We just made 5,000 in one trade. This is wild. So this was a call. We bought a call at 358. Remember I told you don't let a low delta scare you, right? Don't let that low probability scare you. Well, this is an example, right? So we have a probability of profit of 21%, right? 22% if you want to round up, right? We're at 44,000. So we're oscillating back and forth between like 44 and like 48,000. And we're just going to let that go. All right, so the price that we got in was $38, right? Our TP1, TP2 level is 91, TP1 is 65, and then stop loss is 25. That's way too loose. I think again that should be a little bit tighter, but again, these are my thoughts for consideration. We bought 31 contracts, and those 31 contracts was 38 apiece, so that was 1,100, and we had 2,800 left over, right? So we bought it at 38, right? We sold at 65, right? So hit the TP1 level. Held it for 12 minutes, and then we made $800, right? We're at 57,000, excuse me. 59,000. 59. That's crazy, fam. What month are we in? We're in November. Bro, this is crazy. One little tweak. And again, I'm showing y'all the sauce. Like, I'm showing y'all how I went from These 6 grand in one trade, 67,000. Showing y'all how I went from the idea to the back test, and I can't wait to run this. 69 grand. That's crazy, fam. So this was 800 in one trade, right? Now I want to show y'all 10 times that. Is that right? 10 times that. Again, it just happened to catch my eye. The account balance at the time was at 20,000, right? So we're in preservation mode. Again, we started at $100. The account balance at the time was 20,000. We're in preservation mode. So what does that mean? We're using 30%, right? So we can use up to $6,000 to be able to risk. So the backtest is still going. We're at 66,000. Okay, backtest just finished. Let me finish this. This little quick explanation, and then I'll go to the backtest. We'll review it together. I don't need to see that. We'll review it together. Then we will go to talk about it. All right. So the account balance at the time was 20,000. What that mean? We're in preservation mode, right? So the risk amount is 6,000 that we can risk. We bought a put, and the put was 382, right? Again, remember what I told you? Don't let a low delta scare you, right? So we have a 20% chance. I rounded up because the 8. We have a 20% chance of this put being able to expire in the money, right? Or to being able to be profitable. We bought it at 36. Remember, these are our TP levels. So we bought it at 36. We bought 100 contracts. That's crazy. For 3,600, right? So we bought it at 36. Remember that, right? So we holding with the 42, 44, 45. That's crazy. Went from 45, 53, 53, 84. So 84, and then we sold it in 9 minutes at 82. So the peak was 84, and then it dropped. It was like, all right, our trailing stop loss activated. It dropped to 82. Like, all right, let me lock this in. Hold it for 9 minutes. We made 4 grand. That's not bad, right? So TP1, you held it for 9 minutes. You made 228%. You made 4,000 off of a $3,600 trade. That's not bad. That ain't bad, homie. So let's look at our 2023 results. Remember, there are 361 days. Out of that 361 days, we traded 245 of them. So our final balance was $66,393.16. We started at $100. Right? Our Sharp ratio isn't the best, but I mean, what's that return? What's the trade-off here, right? The Sharp ratio, again, we're looking for a Sharp of 0.75 and higher, but the Sharp is 2.27. The Sharp is 0.27, but if you have a chance to make 66 grand, right, is that a good trade-off or is that a bad trade-off? I don't know. I'll let you answer, right? Our max drawdown is 53, meaning that at one point in time, the account was at 40. And we just had that discussion what the drawdown means. But at one point in time, the account balance was at $47, $46, right? Then it was able to rally, kid. When I say rally to 66, that's crazy. So look at the win rate is 54%. That could be better, right? It's just a little above a coin toss, but it's still a coin toss, right? Average trade was 270. The best trade was 6,000. I didn't see that one. The worst trade was 2,700. I mean, that makes sense when you're compounding contracts, right? So let's go ahead and bring the results over. I bet Jake is going to trip. He's going to lose his mind. He's going to lose his mind. Review. And let's discuss. Jit's going to lose his mind, fam. He's like, no fucking way. You mean to tell me a trailing stop loss does all this? A trailing stop loss? Yeah, fam. I was shocked too. I didn't expect that. V4 2023 backtest results. 66. Okay. I know. I'm shocked. Let me get my little emoji. Cause bruh, I know. I'm shocked. Let me get my little emoji. You shocked, bruh. I'm shocked. Y'all can see that? All right, bet. I know. I'm shocked. All right. These peaked at 25 to 39%, but reversed before hitting the 70% examples. Three peaked at 38, exit. Okay, what this means is that these trades had the modest gains of 25 to 39%, but couldn't sustain without trailing stop loss. Most would have hit the time stop worst trade, stop loss more worst trade. The 2100 is acceptable because these prevented bigger losses, but many exited near break even instead of the 35%. Bottom line is the trailing stop solved 2023 problem, 245 trades versus 44. Strategy is fully functional compared to the. All right. All right. What do I want to do? What do I want to do? Do we want to? Um, we are considering before we run on 24, we are considering tightening the stop loss. We are thinking of doing 20%. Okay, I'll do 25. We're thinking of no 20%. No, I'll do 25. 25%. 25% and TP levels of I'll keep that TP level because it's still damn near, it's still more than 25% instead of 35%. Thoughts? Okay. What am I doing? Okay. Now let me just do that because I think I think that'll be a little bit better because we're still at a 1 to 2 risk reward ratio, right? Meaning for every $1 we risk, we're making two because our take profit is at 70, our stop loss is at 25. So even if you double it, go to 50, right? Our take profit is at 70. So I'm still above that 1 to 2 ratio. So being able to tighten it is more. Being able to loosen it, I don't want that, right? So I want to see if we tighten it, right? If we go from 35 to 25, but still keep the take profit level of 70, what is going to be the impact of that? So the risk reward ratio, I can't see the minute by minute prices action from the CSV. Let me check the verbose logs. Looking at the ROI multiples on the stop loss exit, the ROI is 48.64, negative 36 to negative 42 losses. Most are hitting around negative 40 to negative 45 compared to the stop loss set at negative 35, but the slippage push is exit deeper. So key insight, stop losses are already getting hit around negative 40 to negative 50% due to the fast 0 DTE price movement and the exit slippage minute bar by bar delay. My recommendation is to keep the 35% stop loss. The 0 DTE options are extremely volatile and can swing 20 to 30% in minutes. The current stop loss hits are already negative 40 to negative 50%, worse than the 35% target due to slippage. Tightening the 25% would likely cause false exits on trades that would have recovered. The trailing stop already is doing its job of protecting reversals, captured 26K in 2023. Why the 25% stop loss would do, it would exit more winners that dipped negative 25 before recovering to a positive 70 and increase the trade count, most re-entries, more fees. There's no re-entries, you only trade one per day. Better alternative if you want tighter risk is to reduce the position size. Nope. That's already done. Keep the stop loss. Okay. Let's add a trailing, let the trailing stop handle the 25 to 45% reversal zone. So keep it and let's test on. All right. Let's update to test on 24. Okay. Okay. Um, what is this? V3 2023. Make sure that the file is updated for 2024. Think it is 2020. Think it is snap. Believe it is 2023. Remember, I don't want think makes it do extra things right now. I just want it just to make sure that the code is updated. Once the code is updated, um what is this? V4 backtest results 2024. Make sure the CSV file is updated as well. Bro, I got to tell you a lot of stuff to do. Goodness gracious, man. Do your job, bro. Do your job. I'll do mine. Yes, I know. Great catch. Do your job and I'll do mine. How about that? Oh, it's dynamic. Okay, so you kind of did your job. You kind of did your job. You are running on 2024. Bet. We're running it on 2024. We are Gucci. All right. Should we create our mean reversion bot? Should we create a mean reversion strategy today, fam? Should we create this mean reversion strat, fam? I think we should, fam. I think we should, fam. So that's where you came from. Oh, remember the data's loading. Don't trip. Data's loading. Then once it's good, we'll be able to get going. We'll be able to get going. We'll be able to get sliding. I appreciate that. I appreciate that, man. You know how much work I put into this. All right, we're loading our back test. I'm waiting for it to load. As soon as it loads, we'll be able to see the results. Like, do you think it's going to be worse? Is it going to be worse? All right, I'm taking bets right now. Um, hold on. Where is it? Where is it? Over or under? Over or under? I'm going to say parity. I'm going to say remains the same. Let's see. The way it's looking right now, if you would have hit that under, you probably would have caught. If you would have hit under, you probably would have caught. Look. Now, this is when you got to take the emotion up out of it, right? This is that point in time where are you going to let your strategy run right? Or are you going to say, you know what, I'm at $100, bro? Like you are barely struggling, you are barely making it right now, right? Are you going to take the opportunity away from yourself, right? Are you going to be the one to say, okay, you know what, at the end of the day, I just, for lack of better word, no, let me not say that. This is why we take the emotions out of trading, people. This is clearly why we do it, because as you can see, we were down to $44, and look what the strategy's doing. So that's why, like, trust your work, man. Trust your work. Like, we putting the hours in. You wasn't with me shooting in the gym type shit. Like, but we are. I am. We are. We just crossed $1,000. We were at 44, bruh. Look, just a few moments ago. I can't even get back there. Just a few moments ago, we were $55, $43 in the account, $49 in the account, right? Like we were tripping, like, bruh. I'm just saying, sometimes you just got to be able to say, okay, you know what? I trust my work. I trust my work, and let the work do it. Where we at right now? Where we at? Where we at? We're in April, and we just crossed 2,700. So let's see what the strategy is. Got up its sleeve, fam. Remember, if you would have caught that under, you would have hit. I don't know. I'm gonna say it's gonna remain parity. I still think it's gonna cross 100. Watch it. I'm gonna take that $900 trade. Oh, I have a $4,000 trade. Let me break this one down. We just caught a $4,000 trade, so I'm gonna break this trade down. Let's break this trade down. The strategy is at 16,000. Let's breaking down the trade. All right. The account balance at the time was $12,283.53, right? We were in preservation mode. So what does that mean? We're using 30% of the account balance, right? So we can use $3,685.06, right? We bought a put. This put was a 450 strike. Remember, I told you don't let these low deltas scare you. This was a 25% chance of us being able to hit, right? So we got in at $50. So $50, we bought 73 contracts. That cost us 36.50, right? About 29% of the portfolio balance, right? So we got in at 50. Then as soon as we got in, it went up 40%. Then it went up 64%, 94%, right? 128, right? And then it peaked at 140, and then we locked it in. 9 minutes. We made $4,000. That's not bad. So we peaked it, and it was a TP1 hit, right? Take profit 70%, right? So we were able to make 4,000. Then the account grew to 16,000. Right now the account is double that. It's at 31,000, 32,000. So it's exactly double, right? So these little incremental, that's what I'm saying. You got to be able to trust yourself. Well, we just caught 6,000. Let's break this down. Let's break this one down. I'm going to say maybe it's a call. It's a call. Let's just say there's parity. We're at 47,000. And remember, in January, February, March, bro, we're struggling. That's what I'm saying. Just trust the work that we've done. Trust the work that you've done. Trust the work that you've done, right? I ain't holding you. Trust the work. So the account balance at the time was $29,222.04. Right? We're in preservation mode, so we can risk up to 30%. Now that I'm looking at this, I think I may need to drop this to like 20%, fam. We just caught another $6,000 one. Did y'all just catch that? All right, let's go on. Let's keep going. So we risked 8,700, right? We are buying a put at 450. Remember, I told you don't be scared of these low deltas. We have a 25% chance. I rounded up because of the 8. We have a 25% chance of being able to expire in the money, right? Profitable, right? We bought it at 61. These are our TP levels. Remember this. These are our TP levels, right? 61. We bought 100 contracts. It cost us 6,100, right? We had 8,700. So we left over 2,000. So we bought it at 6,100, right? So this is a put. We bought it at 61. As soon as we bought it, it went up to 19% to 73. And then double this money, right? It's at 100%, right? 122. And then we peaked. We took profit at 12 minutes, right? So we made $6,000, right? So we took take profit 1. It just crossed 100,000. This strategy, when I say was struggling, bro, I feel like this is a Meek Mill song, man. I feel like this is one of them like Eric Thomas moments, bro. I feel like this is one of them Inky Johnson's moments. I'm not gonna hold you. I really feel like this is one of the moments that they be talking about. Like you really have to trust your work. We could just call $8,000 trade. Let me catch this so we can break that down. I feel like these are one of these moments that like you got to be able to trust your work. You trust your work. That's this is faith, right? Faith is what things you hope for and things that are unseen, right? It's the hope and it's unseen. So we hoping that the strategy is going to be able to bust. We hoping that the strategy is going to be able to do its work, right? But at times it was looking like, damn, I don't even think it's going to get out. It's going to get out the mud, right? And now look what it's doing. Now look what it's doing. Now imagine once we go paper trade this, what's it's going to do, right? Now imagine if you had this money, what would it do for change? Let's stop. Let's stop. Let me stop. So I just want to reiterate something so y'all can see what I'm screaming. $51. Or excuse me, the entry. Okay, where's the balance? Balance. Okay, net balance is the last one. $80, $92, right? $24, $44, or excuse me, 161, right? Where is it? 273, 117, 327, 238, 185. I'm trying to make a point here. 132, 120, 102, 101, 130, 117, 109, 109, 132. I'm trying to make a point here. 105. I'm trying to make a point here. 104, 106, 100. My point is there's going to be times when like it looks rough. It looks like, yo, I ain't going to get out the mud. Like it looks like, yo, there's no light at the end of the tunnel. But if you trust your work, if you trust the process, man, if you trust that at the end of the day, I know the hard work. I know I've been shooting in the gym. I put up my 1,000 shots. I put in my 10,000 hours, right? I'm doing the work, right? And look what we get to 130,000. That's crazy. So let's look at it. Our win rate is 60%. I'll allow it. 232 trades. Our best trade was the 8,500. I think that's the one I caught right here. Yep, 85.32.91. 85.32.91. Our best trade. I'm gonna go over that so we can talk about our best trade. Right. Our average trade was 558. Our profit factor was 251. So what that's telling you, every dollar you go out, you're getting 252 back. That's not bad, homie. Um, review. and let's discuss. Review and let's discuss. Um, who is it's the Chiefs and who tonight? It's the Chiefs and it's like it's the Chiefs and whom aujourd'hui. Isn't the World Yeah, it is. I feel like this World Series has been like super hard to catch. Like you really had to be on your P's and Q's in order to catch it. Like I want to watch baseball. I'm really not a baseball fan, but like when it comes to October ball, I want to watch it. All right, I'm not doing these intros. Y'all be taking the only thing I'm not gonna hold you like these things take. Oh, I think the Heat playing too. Are the Heat playing? Are the are is when are is when All right. 64 trades. Average trade was 8,000. These are big winners and they got protected. Trailing stop of 20%. Small losers but prevented. Even big losers would have been negative 30 at stop loss. Bottom line is that the trailing stop loss worked perfectly. 131 from 113 without it. Win rate improved in both years. The profit factor improved significantly. No downside. Didn't prevent any explosive moves. Recommendation: keep trailing stop as is. This is a massive improvement without overfitting. Do you want to dive into any other specific trades or patterns? Um, all right. So right now we are barely under the 75% win rate. The okay, let's do this. Um, we want to know if the low win rate, W or win rate, I know it is relative at this point due to the final balance. We are looking for north of 68%. But if the low win rate is just justifiable with the final account balances. Also, what about the drawdown as well? Lastly, can the SL performance be improved without overfitting or introducing bias? These are questions I have answers to, right? I understand that we are hitting astronomical numbers when it comes to our back tests. I understand. Hold on, let me put what was it? 130, 130, 80. It's crazy. Oh, I told you if you would have hit the under, you would have got it. I told you if you would have hit the under, you would have got it. Starting from 100. I know. It's shocking. I'm shocked, man. I'm shocked, man. Um, y'all gonna let me watch some sports or no? Or no? I already talked about that. What you're doing over here, you are reviewing the trades. What am I doing? Um, bro, what are we? I really feel like you spazzing right now. Why? Because, oh man, you jerk. Why? Because. Bam, 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 bam. I'm still in beta mode. I'm still in beta mode. All right, I'm just waiting for the output from our previous questions. And again, I want to be able to figure out the win rate because, again, I normally look for 68%, a little bit higher. Drawdown is a little bit concerning for me, and then the stop loss. So I want to see if there's any way that we can improve it. I mean, I understand, right? I mean, you're talking about account balances over 50K, over 100K, starting at $100. I get it. I mean, other people will be like jumping over the moon, but like real world sets in, right? There's a couple other things I think the underlying factors, right? I think we need to look at in order to get this win rate up. Is the 54 to 61% justifiable versus the 68 target? Yes, here's why. The current performance is 54% is giving us 66,000, right? 61% is giving us 130,000, right? Profit factor is 1.85 to 2.52. It is phenomenal. But again, I just wanted a little bit better. The math is 68% assumes a 1-to-1 risk target risk reward. Your strategy has a 1 to 1.2 risk reward. Losers are 1,200, but the winners on average is 2,000 plus. It's asymmetric payoff, right? 54 to 61% is optimal. Why higher win rate could hurt? Tightening entries to get to 68% could reduce the trade frequency, miss the big winners, lower profit factor, or decrease the position sizing opportunities. Verdict: the 54 to 61% win rate is perfect for this edge. Focus on the profit factor, not the win rate. The detailed drawdown. The problem is that the max drawdown was 74%, right? Peak, it went to 390 and then it dropped to 100. This is an early account issue. What happened is when the account was small from the 100 to 400 range, the greater than 20% DD for the 40 trades 17% of the time. 2023, the max drawdown was 53%, a lot better. It peaked, then it went to 1300s, also 1300, also significant but less severe. The real issue is that the drawdown is the account size dependent. Small accounts, 100 to 500, experience 50 to 74% draw. That is fucking wild. And that's what I want to be able to mitigate because, like, we're going to be small in the beginning. Yeah, we're going to get to that, but, like, that doesn't hurt as much as these hurt. Is this acceptable? Not really. Psychologically brutal, that part, but for compounding strategy, acceptable if starting small and scaling. Can the stop loss performance be improved without overfitting? The stop loss performance identified. The critical state is that 97% of stop loss trades peaked positive before hitting stop loss. So 59% peaked at 10% or more in 2024, and then 12% peaked at 20% or more. Average peak rate of return was 10 to 30%, 10 to 13% before hitting the negative 35% stop loss. Translation: these are winners that reversed into losers. Non-overfitting solution. Option 1, at a break-even stop. After the 10% peak, once peak at 10%, move stop loss to break even. If the ROI peak is greater than or equal to 10 and the stop loss price is less than entry price, semicolon, the stop loss price equals the entry price, move to break even. Why this works: the 59% of stop losses peaked at 10% would have been saved. Not overfitting. This is a universal rule. Protect capital once profitable. Industry standard. Every prop firm used this. Expected improvement: 59% of the 34 stop loss trades, 20% saved. Converts the 1800 average losers to zero break even. Total improvement is 36K in 2024 alone. Option 2 is the tiered stop loss. Start at 35%, tighten to 25% after 20% peak. So if the peak ROI is greater than or equal to semicolon, the tighter stop loss equal the entry times 75%, right? Because our stop loss is 25. Our stop loss is 25. The stop loss equal the max price, open parentheses, stop loss underscore price, comma, tighten stop loss. Why this works? The 12% of the stop loss trades peaked at 20%. 4 trades in 2024 prevents big winners from becoming bigger losers. Not overfitting, rational risk adjustment. Expected saved 4 trades time 1804, 7,000. Smaller impact but address the worst cases. Option 3, earlier trailing. I don't like this. Added 30% trailing tier for the 10 to 24% peaks. Else if the 10 trailing stop loss 30. Why this works, it catches the gap between the no protection 0 to 10% and the 25% tier, and the 59% of the peak that 10 to 24% would have been protected. Universal logic, non-overfitting. Converted the 20 stop loss trades from negative 80 to plus 300 average. Total improvement 42. Yeah, I like 1 and 3. I'm not going to hold you. The break even, effective, and then max drawdown, less severe. All right. Is option 1 plus 3 going to provide the protection the account needs, or should we say guidance or assistance the account needs to make it out of the early growth stage, right? We noticed you mentioned that the worst stop loss happens in the 100 to 400. Is that it? Yeah, 100 to 500 range. Are we addressing this? Again, without overfitting to any particular year. Let's wait and see. You wasn't with me shooting in the gym. But you wasn't with me shooting in the gym. I said PM, I said to get to all my. All right, all right, all right. You're 100% right. The problem is not the smaller account phases, it's the stop loss reality. Are you sure? It's a stop loss reality that 87% of stop loss trades happen when the account was greater than 1,000, 56% of losses, and then 82% of stop losses happened when the account was greater than 1,000, negative 61% of losses. These small accounts only 5 to 7 trade. Average loss was $30 to $40. But bitch, if it's $100, that's not manageable. The real problem is that the large account position sizing stop losses are using 65 contracts on average. When accounts hit 10 to 50,000, the risk, 30% risk per the dynamic. Yeah, I understand that. Why, with option one and two, this will not address the main problem because the break even stop helps the 59% of trades good, but the big losses, the 2K and 4.5K, happen when the account is large. These trades still peaked at the 10 to 20%, then reversed hard. The break stops won't save them even if they reverse as fast. What we actually need without overfitting is the position size cap plus the faster trailing stop for larger accounts. The root problem is that once the account hits 10,000, it uses 30% of risk, right? By 60 to 100 accounts, the price reverses, loses 2 to 4,000 in one trade. Universal risk without cap 50 per trade. Currently unlimited, getting 60 to 100 contracts. Industry standard. Prop firms cap position size to 2 to 55% of account, prevents catastrophic single trades loss, no overfitting. Universal risk management still allows the 50 contract exposure. Okay, expected. All right. Tighten the stop loss for larger accounts. Reduce stop loss for 35 to 25% when using 20 plus accounts. Okay. Why this works. All right, early trailing. So once account is 1,000, start trailing at 5% peak versus the 25% peak, right? Why this works addresses the exact problem for the large account stop loss trades at 10 to 13%, then reverses 97% of the stop loss trades peaked positive. So these catches them early, account size based, not year specific, universal. Implement A and C, cap, and then add the early. All right. All right. With doing option A plus C, do we still need to do um do we still need to do 1 plus 3 we talked about before? Bruh. This is crazy. Just give me a simple yes or no so we can get to this work. Let me check my levels. All right, we Gucci. Original suggestion applies to all account sizes, including small accounts. A and C is the better choice. Capped at 50 prevents large losses. Early's for small accounts. A and P is superior, adjusts the real problem, helps all trades equally, right? Targets the large accounts with, okay, doesn't hurt early growth. Tightens, stops when account is 500 to 100 to 500, could slow growth. Okay, only activate when account is larger than 1,000. Let small accounts breathe. Um, the expected performance, higher upside, more conservative. Okay. Add, see. Okay, this is what I'm going to do. Because for me in my house, I like to have a backup. What is this? Let's count. This is version 4. Version 4. Damn, I messed up. This is V4. This is V5. 2024 V5. Let's move. I appreciate you. What I'm going to do is copy this code. Proceed. And then Yep. My little backup right here. Save this code. Close that one. All right, now we got a backup. Just in case I want to revert some shit, we got a backup. We got a backup, homie. Because I know. Let me add a max contract. This is crazy, fam. I'm just asking you for one thing. It's not like I'm asking you for 10 for one thing. Can you please just show me the game? Perfect. I can see there's already a max contract, 100 on line 239. Let me update it to use the global constant. Good. Let me implement option C. Is the account tiered trailing stop? First, let me check the current trailing stop logic. I'm asking you for not asking. You ever had that teacher that be like, all right, don't ask me, ask me. Don't ask me, bruh. Ask me, bruh. I'm going delusional. Y'all still getting good quantity. Y'all still getting great work. Y'all still getting great work, man. But it is what it is. Let's double check before we proceed. Um, Let me get out of that one. Go on this one. And while Jit is double checking, let me update and go ahead and open up Python. I think I'm ready to run. Are you? I think I'm ready to run. Are you? Are we running it on 2024? Let's check our data. This is wild. Thank you. Just please listen to me. I'm trying to get my TV to work, but it's not listening to me. All right, running our back test. We're running our back test. Let me do. This is I said version 6. This is 6 because we just did 5. So backtest v6 2024 data account final account balance. Yeah. Yeah. Sorry, I just heard something. All right, we getting our work in. I'm waiting for the back test to finish up. As soon as the back test finishes, then we're going to look at it again based on the results. And I'll be like, all right, we're Gucci. All right, back test is running. Finally, I just asked you to show me one game, bro. I don't ask for a lot. I really don't. I really, 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 really don't. Don't. 101.18. Lowest I've seen so far. Right now, we're at 101. Again, remember, we saw this before. What are you going to do, right? Are you going to wuss out and say, okay, you know what? I can't take it no more. Let me just go ahead and tap out. Or are you just going to let the strategy's at $100? Remember, we start our back tests, all our back tests, and still said otherwise. We're starting at $100, and we want to see how well it survives it. Boom, boom, boom. Who do y'all have winning the World Series? I think it's going to go 7 games, and I think the Dodgers are going to pull it out. I'm not going to hold you, but I think it is going to go the full 7. I don't think it ain't going to be no 5, no 6. It's going to go the full 7. I think it's going to be another round of blowout, blowout, good game. So what is it, game 3? So blowout, blowout, good game. So 4, 5, 6, and then 7 is going to be another good game. So 6 and 7 are going to be good games. 4 or 5 maybe blowout games. So I think that the Dodgers may be a little underestimated. We're at 3,000 right now. And since we've done this a couple times on 2024, I'm not going to take the best trade. But I'm going to see if it crosses over 8,500. If it does cross over 8,500, then I am going to take it. But for right now, I'm just going to allow it to go. Da-na-na-na-na. Strategy is over 8,000, bro. Strategy's over 8,000. Oh, I'm looking at the month. What month are we in? Strategy's over 12. We're in June. So y'all see this. Y'all see the grind, man. Y'all see the fortitude. Y'all see the persistence. Y'all in the gym with me. You all are in the gym with me. Right? I think there is some basketball on tonight. I think there is some. Oh, that's who I thought. Okay, this is gonna be a little good game. Washington versus the Chiefs. Is Jalen playing? Um, is Do y'all know if Jaden Daniels is playing? I guess we about to find out. Oh, go score, white boy. Who's that? Oh, McCaffrey. It will be a McCaffrey. Oh, Mariota. So I guess Jalen is on the sideline. Mariota's not a slouch. Did you win a no? I don't think you was at the Eagles when they won. You've been. I think the highest I've seen right now is 3,600. Or 2,000. It just glanced. I think it was 3,000. 3,000 40 10. I think. Well, they got their full complement. You know what I'm going to do? After we're done here, I'm going to run the back test on 2022 so we can validate. And then after we get the results, I'm going to hurry up and just make our bot so we can have our bot done. And then tomorrow, again, I may be on Twitch, but I don't know, depending on how I feel when I wake up. Because again, I'm loving this vibe over here on YouTube, but I may be on Twitch. But tomorrow, but y'all still see the video. Don't worry. I'm still going to upload it here, but it's just a matter of being alive or not. Tomorrow, being able to do the mean reversion one, and then 3,800 was the biggest one I've seen so far. the mean reversion strategy, right? So it's not a breakout, it's a mean reversion. So remember what mean reversion is that even though it peaks to its new high, it's going to go back to its average. Even though it dropped down to its new low, it's going to go back to its average. So a mean reversion is a strategy that bets that, okay, you just popped or you just dipped, but you're going to go back to your average. So normally when I make a breakout strategy, I normally make a mean reversion strategy to accompany it, such that this strategy can have a full, get off me, a full complement, or excuse me, full coverage of being able to trade in the market, right? Now, normally I don't do that, but like I've been finding some success being able to have, well, 4,200 biggest trade I've seen so far. I've been finding some success being able to have the mean reversion and the breakout strategy created together. And we also going to create a regime detector. It's December. I guess we're not going to cross 100. That's still fine. I'm fine with this. I think this is a little bit more plausible than seeing 100K. I am completely fine with this. What was I going to say? Oh, yeah, I've been finding a lot of great results being able to have the breakout and mean reversion strategies. And we're also going to create a regime detector so that can let us know, okay, hey, on what day we should run whichever. So let me look at this. 58%, 33%. What is the profit factor? 2.48. So let's look. Still the same amount of trades, but something something happened. Is that Marcus? That's crazy. Review and let's discuss. What was that? That's crazy, ain't it? That's crazy, ain't it? Let's go ahead and grab. Y'all know what I'm doing. Y'all know what I'm doing. Okay. Major problem. The performance got worse. 65%, 65,000 missing, 50%. What about the profit factor? Profit factor got worse. What went wrong was the trailing exit at 30%. These are catching 15 to 20% of peaks and exiting too early. The 1K penalty is getting stopped with small accounts wouldn't have been. Um, Way too early. Exited 30 to 40% trailing tiers for the account of 1K is too aggressive. Okay. Ja'Cory Krosky Merritt or Bill. 7th round pick. I was saying, you never know. These are football players all at the end of the day. Yes. Some get drafted higher, some get drafted lower, but oh, picked off. Damn, kid. Y'all were driving too. Okay, helped, but the early trailing stop lost 80K. The key fix, keep, remove the trailing exit. Okay. All right. Let's remove the account tiered trailing exit. But how are we going to account for the 0 to 20% range for peaks? Are the span? I don't want to hear that. Are the Spurs for real? Get the heck out of here. Get the out of here. The Hawks and who? The Hawks and the Bulls. I'll watch this. Great question. You're absolutely right. We still need to address the 0 to 20% peak where the 97% of stop losses trades are getting killed. Let me analyze what actually happened in that range. The 10 to 20% range is the killer. 18 trades, 40% of all the stop losses. Let me look at the account size. Smallish, small, mostly happen between the 200 1,000 range. The solution: a break even stop after reaching the peak. Instead of the account tier, use a universal break even rule. Option: break even stop after the 12% peak. Simple universal rule: once trade peaks at 12%, move stop loss to break even. Entry price: why 12% catches 31 out of the 34% stop loss trades that peaked at greater than 10%. Converts the 35 to 0 instead of I mean, can we get the peaks out of it instead of just breaking even? Brilliant, Dr. Bag the fuck. Okay, that's not lock in partial profits from the peak. That's way better. Okay. But this is option contracts, right? So partial exits aren't going to work here. Let's try again with this. If this was stocks, that's a different story, right? You can do partial exits depending on the platform. You're absolutely right. We can't do partial exits with option contracts. It's all or nothing. So the choice is a break even, exit at the entry price of 0 PNL, save, prevent stop losses. Or option two, trailing stop from the peak. Once peaked at 12%, trail at X from that peak. Example, peaked at 15%, trailing at 20%, exit at 846, 46, 8% peak. Um, the 20% trailing peak, best option. Okay. All right, let's implement this. Ba-dum. We're doing a lot of great work here, fam. We're doing a lot of great work. This process is called optimization or tuning or adjusting your parameters, right? This is part of the process that some people don't like to show because this is where you get your edge. I mean, I'm still going to add my own edge, right? And before I deploy it, and that part I may or may not show, I'm not going to hold you. Like, I still have my own little secret sauce to be able to add. Um, okay. This is V6 2024. Um, double check and make sure what we've done is complete before running backtests. Yeah, so I still got my own little edge, my own little alpha that I'm going to add, right? I don't know if I'm going to show that yet because, again, that's my own edge, my own alpha. But if you all are following this process from start to finish, you can do that too. Head ass. Excuse me. I ain't want to cough in your ear. But I think that's where okay, everything is good, ready to run. Damn, and it's about to compact. Bruh. Bruh. Are running our back tests. After this, I'm gonna run it on 22, gauge the performance on 22. Again, we're testing on 23 and 24, and then we're gonna validate on 22. I'm not expecting that good of a performance on 22 because 22 is a bear year, and that's when the mean reversion strategy is going to come out, right? Oh, you know what? I ain't even adjust the VXN how I wanted to, but that's fine. 33 is still good. 33 is still Gucci. Did somebody fold? Y'all just went ahead and. All right, come on, baby. Here we go. Our back test is running. Let's see right now. Let's see right now. Oh, look, trailing stop 12%. So you can see it's actually helping right here. So you can see wide open. So y'all know how to play defense. Trailing stop 12%, right? So you can see the trailing stop is helping. So we can see the trailing stop is helping. I mean, it's mitigating the losses. We're in February, and remember we used to see that, oh, we can't trade, but we're above it. So I mean, it is helping. I am seeing a bit of improvement. Okay. Yeah, this strategy is running. This strategy is running. I just want to finish up the. Hold on. Let me get. I don't want. I want which bot? Let me get Lotto Baby. Oh, did I fix? I don't know if I fixed that issue. Freaking A. I don't know if I fixed. Yes, I did. Yes, I did. Yes, I did. Just in case, let me just grab. Let me grab our bot example. Copy. Paste it here. Also need the account. Beautiful. Copy. Then we're going to paste it here. So we have our example bots. And then again, this is our meme reversion. This is our another momentum breakout strategy, but this is trading SPY 0 DTE, right? If you go check out another one of our videos, I made this here live with you all, so you all can see that. Oh, you all know what else I need to bring in now that I'm talking about it. Did he just pick the ball off? Yep, I think he just picked the ball off. So we trade in interceptions. Yeah, we trade in interceptions. Mariota just threw a pick, and then Patrick just threw one right back. Not right back, but close enough. I need to bring over IBKR. That's what we're using for paper testing and real testing. And I need to bring over Alpaca. I think that's it. I don't need to bring over anything else. I think that's it. All right, IBKR is there. Alpaca is there. Perfect. Yeah, I think I think it's helping. I think it helped. When are we? We're in June. We're at 21,000. I think it helped. You know. Oh, you know what? I'm not going to be able to complete the bot with this. Should I just let it compact again? I think I'm just going to let it compact again and then go through it and then give it like another 15, 20 minutes, y'all. We will be done with our session today. You've seen us go through creating the bot from start to finish, from idea to back testing. I'm going to paper test tomorrow. Again, I just don't know if it's going to be here on Twitch. So if you want to follow me on Twitch, same handle, Creative Coder, with a K, and then and without an E, Coder without an E. So KODR, Creative with a K. And I'm going to be paper testing either there or on YouTube. If you get it on YouTube, you'll get the notification for all my peeps here. And then for um Twitch, if I'm there, I'm there. So actually, still got to show them love. We still got to show them love, fam. I've been putting in work. I'm not gonna hold you. Like average stream time is like 2 hours. Putting in work, man. We putting in work. Oh yeah, I was about to say, didn't I? Oh, QQQ. We're at 28K. I'm just letting our strategy finish, and then after this, I quickly I'm going to run 2022. When I'm running 2022, I'm going to get. Yeah, I still need to run 22, man. We still need to run 22. We just crossed 42,000, and we are in October. Yeah, these soft tissue injuries be getting everybody. The soft tissue. Nice. Nice. Oh, nice catch. McCaffrey, nice catch. Nice catch, McCaffrey. What's the winner? Oh man, all this just to be able to abandon this work, bro. I think we just gonna abandon it. Oh man. Much better, but one issue. The problem is that the trailing stop 12% is negative. I thought it was going to be positive. This is bad. The 12% is costing us money, not making it. Widen instead of the 20, use a 30 for the peak, 12, trailing stop 30 with 20 gives us more breathing room for 0D volatility, still protects. Um, okay. All right, proceed and also update so we can run on 2022. The data is right here, right here. The data is right here, right here. Oh, that's crazy. Oh, you know what? I do have the data. Thank you. I was about to say, not you. Here is the data. So I can have it and no, we want to run on 2022. Let's update to do so. Matter of fact, I'm just going to stick this data here. Data for backtest. I know. I just need to find it just in case I do. It's right there. Bro, can you? I don't think that's going to work. I think that's cap. Um, let's see. Verizon got this lean on me commercial. I told you it's cap. Free. Oh shit. It actually did work. Never mind. I thought it was gonna be cap. Um V7 2024. I thought that was going to be cap. I didn't think that was going to be correct. I appreciate it for actually working. I appreciate it for actually working, fam. And this new AVP coming out is going to be interesting. This is our first time running the back test on 2022. I've been wanting to do it, so I'm interested to see what the results are going to be. Let's check it, homie. Oh, this is a good game. Right there. DeAndre Jordan, you still playing basketball? That's interesting. You made it to New Orleans. Second worst free throw percentage in NBA history, 47.5. Ben Wallace has the worst. You probably don't want to laugh in their face. Their face. Yep. Mm-hmm. I never understood that, bro. You are a professional. A professional, right? That means you get paid to play basketball, but you can't make a free throw? I would have thought Shaq had the worst, but it's Ben Wallace and DeAndre Jordan. That is interesting. I would have thought, okay, now I'm interested. Top 5 worst free throw shooters in NBA history. Okay, he is up there. That's crazy. I didn't expect Wilt Chamberlain, 51% from the field. The man that scored 100 points, 51% from the field. And Shaq is not top 5. So this is shocking. This is shocking, bro. I didn't expect Wilt Chamberlain could not shoot free throws. Dwight Howard, top 10 type shit. Josh Smith? Really? You couldn't shoot a free throw? Josh Smith from the Atlanta Falcons? You can shoot free throws? Oh, that's crazy. I didn't know that. Tippy toes? Couldn't shoot free throws? You know what I'm talking about? Antoine Walker? Tippy toes couldn't shoot free. Tippy toes couldn't shoot 3 throws. Antoine Walker couldn't shoot free throws. Top 25: Paul Silas, Evan Hayes, Nate Truman, Buck Williams. This has nothing to do with what I'm doing. I'm just curious. Chris Webber, you could not shoot free throws? 64%. But me, if you, this is shocking. I thought Rudy Gobert would at least made it top 25. How you let Rudy shoot better free throws than you? Shaq, how you let Rudy shoot? 41%, Ben. I don't think he played 1,000 games, bro. 1,000 games, 1,200 games. How much? Dwight played 1,200. That's crazy. I didn't know you played that many games, Dwight. That's crazy. That Will Chamberlain one kind of threw me for a loop. And this is okay. We just found out that the strategy, this is a bear market, right? So I expected it not to do too well. I do have a bot that I'm going to create for our bear market, so I'm not worried about that. I just have to actually implement it. But for right now, I'm just going to focus on this this breakout one. All right. We had 65 trades. We peaked at 545. Our sharp ratio is trash. Win rate is trash. Best trade was $200. Worst trade was 138. This is a bear market, bro. I didn't expect that much. Whereas the other two are bull markets. It makes sense, right? Breakout bull. Um, Review and check. Key losses, 29 stop losses, 30% of the account, trailing stop loss. Okay, it's still problematic in 2022. 2022 is a brutal bear market. The trailing stop loss um okay, all five peaked at 12 to 20%, but reverse hard. The 30% still is not enough to cushion the 2022 volatility. The main issue is that the stop loss at 993 is dominating the losses. This year has severe downturns. Okay. What are we recommending now? What are we recommending to fix? Yo, that Will Chamberlain stat is still kind of messing with me. Like I didn't expect Will Chamberlain to shoot worse free throws than Shaq. The core issue is that the stop loss are cushioning performances or crushing performances across all years. Two option is to remove the 12% entirely. It's losing money in all tests. Recommendation: remove the 12K and widen the stop loss. Fuck no. The X. Um, you threw another pick. Oh, you fumbled. You fumbled. Kelsey fumbled. Um, we want to remove the trailing tier of 12%. But what about the gap of 0 to 20? How is that going to be covered once removed? And I'm not widening the stop loss, bro. That like crushes my 2 to 1, or excuse me, 1 to 2 risk reward. So I'm not doing that. This is not an option. Once we remove the 12% tier, the we'll only have the 35% exit, 15 or this. The gap is the peaks between 12 and 24 have no downside protection from reversal. Options to cover it up is to lower the 25% tier to 15 instead of okay, covers. Add a tighter, accept the gap, let the let's test dropping from 25 to 12. Da-dum, 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 da-dum. Would y'all be mad if I did this by myself and just showed y'all it tomorrow? Would y'all be mad? Shit, bro, that was 2022. Um, Freak. Listen, the previous V8 and check V7 were 2022. I have to move into its own folder, bro. Um, Okay, thank you. Go score. I think it's weird calling them still calling them Commanders, bro. I still want to say the Washington Redskins, but it's still weird calling them Commanders. I think the Washington football team is going to turn they NFL team really call themselves the Washington football team, WFT. That's crazy. What the fuck? WTF? I think Mondays are going to be the days I'm maybe double up, and then throughout the rest of the week, y'all probably get one little stream a day. But Mondays is a cool day. I could double up to these days, Mondays and Fridays. I want to get this deployed. Wait, did you fix it? I don't even think you did. Did you fix it? All right, let's look. Let's look. Even though it says trailing 15%, it's supposed to be 12. It just hasn't been updated here. Are you tripping? All right, I am getting. I don't know if I'm trusting my eyes, but it's March and we're at 900. We just crossed 1,000. I didn't see that last time. And this is a super bear market, y'all. If this strategy makes 1,000, I'm not creating the meme version. I'm just going to keep this version. Yeah, looks like just keeping this version, y'all. I didn't expect this. I thought I just expected. Yeah, I didn't expect this at all. It's crossed 2,000 and it's March. Let me shut up and just wait. Did we just fail forward? I think we just fell forward. I think we just fell forward, bro. What I mean by that is so while the backtest is running. So you see, it was trying to tighten the gap. It went from 15. It was trying to go from 25 to 15. I was like, fuck that. Let me try 12. And look what's happening. I think we just fell forward. And the reason I'm saying that is because I kind of was scratching my head as to what was going on. All right. If we cross 10,000, whoa. I think we unlocked something that was not intentional. I think we unlocked something that was not intentional, fam. Like $10,000. This strategy went from struggling. When I say struggling, y'all, struggling. I don't have result. To crossing 16 grand. This don't make no fucking sense. Oh, you're running on 2024. It's running on 24, not 20. Bruh. Oh, I forgot. I just played myself. All right, man. We are getting what is that thing called? All right, y'all. After this, we're gonna call it a day. I'm gonna finish the rest up tomorrow with y'all. I'll be back on like super early. Here I go thinking I'm running 2022 back test, but it's just 2024. That's freaking hilarious. I kind of still want to see 2022. Where is it? I wonder, can I run two back tests from the same one at the same time? Shit, we about to find out. It's August. I don't know. Let's see. Can we run two back tests from the same one at the same damn time? And again, I just want to see how 2022 performs. Um, Rest the second quarter. Yeah, this is gonna be the last thing I want to do with y'all. I am not gonna hold you. Because one thing is, once this start to feel like a job, oh no, I'm tapping for the day. Because I don't want this to feel like a job. I'm going to treat it like one, but I don't want it to feel like one. So once it start feeling like a job, I'm going to tap for the day, and it's starting to creep up on that, right? So we are in what month? September. We just well, there you go. Y'all playing some football. Now I'm interested in these 2022. What you gonna be screaming? Getting them running on 2022. We're at 600 right now. I just want to see if it can hold 1,000. If it can hold $1,000 line, or even 500. If you can hold the 500 line, like I'll be super surprised. If it holds the 1,000 line, I'll stick it out, and I will make the bot live right now with you all. If it can hold, if 2022 could hold the 1,000 line, I'll fuck it. I'll stick it out, and we'll just make this bot right here with y'all instead of coming tomorrow. So if it can hold the 1,000 line, then I'll do that. If not, I'm gonna call it a day. It's November. We're at 55,000. All right, I'm cool with that. And that's okay if the strategy can't find positions. I don't want it to force it. I did give it a goal. It's just like a slow bleed right now. And go score. I think the strategy peaked in 2022 at like 800, 900. Now it's barely, I say barely at $33. The Yeah, you short. The fact that I was able to find a contract for $11, that's the I don't know if that's the crazy part. Yeah. Y'all, we gonna call it a rapidy dappity dap on this one. I'm gonna let this back test finish, and then tomorrow, what we're going to do is finish up the work that we've been doing. And then we should have our bots ready to go. Now, I may make it. I'm not gonna hold you. If I do make it, don't be mad. I'll still explain it from start to finish so you can see it. And I'll even give out the prompt for it, right? And if I make it, I promise I'll come on YouTube first. But if I don't, I most likely will be on Twitch. But nonetheless, this back test is about to wrap up for 2022. We did a lot of great work today. It's your boy Creative. We will be back at it again tomorrow. But nonetheless, if you do have any questions, comments, or concerns, please feel free to leave them in the comments, and then I will check them out later.